Hello, everybody. Joe Malone coming to you live on the Dallas trading floor. It is Friday, and it's been kind of a tough week. Um, we we had a little bit of a rally at the end of the day here, but overall, not the greatest thing. I think we're still going to head down on the S&P, and probably I'm predicting we're probably in the next month or two we're going to see probably a drop. Down to about 320 on the spider. We'll see kind of what the deal is here. But let's get into the kind of the feature of the day, and that is Bitcoin. I found this very, very interesting article on Bitcoin, and I think it's very interesting because it kind of points out one of the things that I think is going to overhang Bitcoin coming back, and that is that there is record production of Bitcoin that are going to the crypto mine, that coming from the crypto miners to the exchanges, and the exchanges are incredibly weak right now. We have some of them that are not allowing cash withdrawals, so this does not bode well. We have increasing supply of Bitcoins for sale. At the same time, we have a liquidity crisis at the Bitcoin exchanges. So this is looking, at least in my way of thinking, like the kind of the perfect storm, and it might indicate a situation where we have a real fall off in the price of Bitcoin. Now, I currently don't own any Bitcoin, so this is not a recommendation or anything like that. But one of the things I want to point out is that I think we could have a liquidity crisis in Bitcoin. So if you do have exposure in Bitcoin and you're down more than 7%, I kind of think that you might want to liquidate your position, because I do see some weakness there. Basically, the profitability of mining the Bitcoins has slumped about 80%. So something is going on here, and we may see a capitulation in the price. And if we do, right now we're holding at about 20,000, but we could definitely go lower than that, no question about it. And if we did, that would be a situation that would be very, very difficult. Let's take a look at the chart for Bitcoin, and this basically shows this is the year to date. And as you can see, we're right down at the 20,000 level. We're at 20,566. That's where it is currently. That's the year to date. Now, I do think that there is some support there, but I also think that it may have the price and move lower than down. If it moves below 20,000, I think the next stop is about 11,000, and then it could move even lower than that. So, to protect your position, probably if you have Bitcoin right now, you want to be kind of cautious about this, because I do think that we're going to see more. We're going to see some more weakness based on the fact that the supply of Bitcoin is quite high because of the miners. The demand for Bitcoin is going lower because of the rush into the dollar. People right now are liquidating their assets and they're moving into dollars. And now everyone is going to tell you, well, there's inflation, Jim, and that's going to be that's the end of it. But it's not true. It's not true. In periods like this, people move to liquidate their assets. Asset values fall, and they move into typically currencies such as the dollar, such as the euro. So here's the thing. You want to be careful. You don't want to let the asset values fall too much on you. And I do think that Bitcoin is very, very vulnerable to that. Now, there is a ETF that I track. It's called the Grayscale Bitcoin Trust, the GBTC. I want to show you the chart on this one just because I do think it's very relevant to the situation. And that is, as you can see, we were all the way back up here. And this is sort of when the slide started back in November. This is when the weakness started, both in the risk assets, for instance, in the NASDAQ and the S&P, and also in crypto. That's hit, the GBTC hit its all-time high, $55 for a share. Currently, it's at $12, so it has lost quite a bit of its value. It's lost about 75, 78% of its value, and it's moving lower. This is a proxy for the rest of the market. So I think you have to be extremely careful. I think you have to be extremely careful here. Here's the thing: if you do have Bitcoin in one of these wallet companies, consider consider trying to withdraw. Now, you're not going to be able to withdraw from all of them because these are not like banks; they don't have insurance. So you have to be careful. Now, I'm not trying to stoke anything here. Again, I don't have any Bitcoin, and I don't own any shares in any Bitcoin company, but the word has been put out there, and I think I tend to heed the word as well because we're going to see probably some more weakness. Also want to show you COIN. This is Coinbase. This is one of the largest exchanges out there. Now, they are still, as far as I know, they are still liquid, but they have laid off 11,000 people in their company, which I find amazing. They say about 18% of their workforce. This is the chart of the company. Currently, the relative strength on this is 1. That means that 99% of all the other of all the other shares of companies in this weak market are stronger than this one. So this is a incredibly weak stock right now. It made its all-time high. It made an all-time high when it IPO'd. I was actually in on this IPO. I basically was in it for about 30 minutes. I basically bought it, let it run up, and then pushed my stop loss, and I was out. But the intermediate high 368.90 that was made back in November. Again, this correlates very, very strongly with the Nasdaq falling, and also the S&P at basically in November. And currently now we are down basically at 51. That would mean that this has lost more than 90% of its value here, basically, but about 90% of its value. So this is telling me that we are in a situation where we may have a run on the coin exchanges. So if you do have Bitcoin and you do have something in that, consider liquidating your position. And I think that you're going to sleep a lot better, because that could be a major issue. That could definitely be a major issue. Now, let me get into what I've got going on. Very little exposure right now. I'm mostly in cash. This is the chart of the small portfolio that I keep. Basically, I'm only 8% invested right now. Very, very small amount of investment. And I'm invested in what they call the TBT. This is a ETF that moves in conjunction with the bond rates. If they move up, the TBT moves up. Now, it was off a little bit today, and I did sell right before the before the Fed meeting. I did liquidate a part of my position. I still have some of it, but it is definitely there. So I was buying it currently when it came out at about 25.78, and then we moved up basically to 28.93. I did liquidate the position there, and then I did make a buyback. We're currently down below that. I bought at 29.42, and we're at 27.49. So definitely a pullback here, but I do expect, at least as long as interest rates are continuing to go up, I do believe that this will probably benefit. I'm also down on Shell and on I'm also down on Shell and also on BP, and there has been some selling there. So when the market starts to turn over like this, everything gets hit, even some of the very best stocks. And Shell, of course, and BP are all in that category as being some of the strongest stocks in the market. I do expect a little bit of a bounce on. I've been looking for a place to re-enter on ExxonMobil, but that has not been the case. This is the chart of Shell. It has come down. It has come down, and I probably will be liquidating this position if it moves below the 200-day line. But I have a very, very small position left. I've basically been stopped out before this, but Shell weak, and as you can see, we have earnings in 41 days, and there's quite a bit of selling action coming into the issue with BP. This is also It's also been pulling back. I still believe that these stocks are in an upward trend, but as you can see, BP is definitely fallen below the 200-day moving average. So we're probably going to be liquidating that one too. Very, very small positions though, basically a quarter position. So not a whole lot of exposure there in those stocks. Want to get to an interesting trade that I think that the weakness in Bitcoin has shown that there is a opportunity for a very nice trade, a bear put spread on the spider. Now I haven't entered this one yet. I'm going to look to do that. To do that probably on Monday. I'm going to put this in for that. But this is kind of a trade idea right now, and this is on the spider. Of course, that is the ETF that covers the S&P 500, and this is a bear put spread. Basically, pretty easy to get into this one. Basically, the risk on this one is $448. So what you would do here is you would buy the 22 July, 356 put, and then simultaneously sell the July 22nd 348 put for a total out-of-pocket expense of about $448. Now let's take a look at the chart so you can take a look to see kind of what I'm talking about here. We're starting to see some weakness. There is the bottom of a consolidation here. So we definitely have a situation where we probably won't see, I definitely think we're going to get support right at about 361. We're currently at 366. So, but I do believe it's likely to fall lower than that on this one. That's the reason for the 356 put and the 348 put. Kind of giving you a payout map here. This one potentially, if it does fall, if it does fall and it is below 350, it is below 348. If it falls below 348, then in this particular scenario you would get all the money, and that's about $1,100. So it's pretty nice. 1152 is the payout on this one, and so this is about a two and a half time scenario here. So if it did fall basically down about to, and it's kind of about right here, 256, 256. Then you would make all the money. It has to basically fall less than about 4%, and I do believe that's going to happen over the month with the spider. So that one is an interesting one. You might want to, maybe do a screen grab or something like that, just kind of see what I'm doing here. But there you go. That's the bear put spread on the spider, and the out-of-pocket expense $448 on that one. So kind of interesting, kind of interesting way to go, I think, on that. All right, so let's get into some of the questions from everybody online and possibly in the chat room. Okay, so here we go. Let's go to TikTok first because we have a lot of interest here, which is great. What is your background? Well, I was a financial analyst with a company called Deloitte and also PricewaterhouseCoopers, and I've been trading for about 20 years. All right, let's see. Bitcoin is done. Yeah, I'm afraid probably an ETF is done. Okay, let's see. How much lower can Tesla go? All right, let's take a look at Tesla because I think there's going to be a lot of interest on this one. We did see a nice little bounce on Tesla, but I just don't think it's ready to move upward again. I think that we're still in a sort of a weak market, and it's just a tough. It's tough to trade in these markets. Why? Because of course, we just have a lot of this overhead supply. I'm going to the weekly chart here. If you're watching on YouTube, it's youtube.com/Dallas Trading Floor. To kind of give a look see. Let's go ahead and get rid of some of my markups here because I did have a bunch of them on there, and I kind of do this. We're right at a critical level right now. We're at 649. I do believe that there is some support right at about right about the 580 level. That's kind of what I'm seeing. I'm seeing it right a little bit below that where we are currently. That's kind of where I'm seeing it. And so I do think if it does fall below there, we could have a fair amount of selling. Now, why do I think that? Well, part of the reason that we're continuing to have a lot of selling pressure is because of the overhead supply of Tesla. What basically I mean by that is that many people purchased it above this pivot right here. I'm going to put that in. The pivot being right at about 900. And so there's a lot of people that are trapped up here. Anytime we're going to get a rally, they're going to be selling. So I do think that the support for Tesla, at least for right now, is weak. I think we're going to probably need a few more months to go through the overhead supply. Typically, it takes about a year in this situation to clear out. Currently, the overhead supply is above 900. So my guess is that as Tesla rallies, you're going to see people that have bought up here, they're going to liquidate their positions, and it will push Tesla down. So I do see that we're going to be constrained probably on Tesla for a while. My guess is probably until at least through the end of the summer and possibly into the new year. But when this falls, we're going to probably get another chance on Tesla, which would be a very good thing, because I do think that I'm still very bullish on the company in general. I just think that there's a lot of overhead supply. It's overvalued right now. This is a tough market to trade. Why? Because it has been it's essentially overvalued right now based on the rest of the market. The asset values have fallen, and so too has the price of Tesla stock. So I wouldn't be buying it right now. I wouldn't be buying it right now. Somebody from YouTube is interested in a bottom prediction. I don't know if this is a bottom prediction for Tesla or it's for the market. I do think, though, we are going to get a bottom, but we're fair ways away from that right now, from getting the bottom. So let's take a look at the S&P 500 on the charts and see if we can come up with sort of the kind of what at least I'm looking at for potentially the bottom. Now, and this is very speculative, of course, but let's put the full chart. Yeah, here we go, full chart. There we go, full chart. All right. So with the S&P 500, we basically have the weakness started basically back here in November when and then into December when it peaked. The S&P 500 peaked at the 48.18. That was the peak. Then we came down for the first leg down. That basically ended in basically in the first week of January. Then we had a relief rally. That was the first leg down. Then from there, we had the second leg down, which basically ended in March, basically March 11th. You can see this volume spike up here. Then we had another rally. This is the relief rally. This is the strongest relief rally that we had. It rallied up to 46.37, and that relief rally ended basically in early April. And then we had from April till basically from basically the third week of May, we've had this third leg down, 1, 2, 3 legs down. Then we had a rally which broke basically in the first week of June. We broke, and then we've come down with this downward leg. My guess is we're about halfway down on this leg. I do believe that we're going to come down to right about 3,200. That's my guess. I think we're about 50% down. We're going to come down another probably 10% from here. So I'm kind of looking at a potential of about 3,200 on the spider on the S&P 500, probably towards the end of probably towards the first week of September. I'm looking at probably September as possibly a bottoming, and I think that we're going to probably have a little bit of a relief rally into the end of the year. But right now, I'm looking at about 3,200 on that. So that's kind of my take on where I think it's possibly going to go from here. But it never, we never know. All right, thank you very much, Charles. Let's take a look at the oils. ExxonMobil, XOM. And I've been looking, I do like this one. I've just been a little bit gun shy in this market just because, we are on a leg down, and even in a leg down, it doesn't matter. We end up getting, we end up getting this weakness, and now we're below that. We're below the 200-day. We're below the 50-day moving average. We're still above the 200-day moving average. Relative strength is 97, but the relative strength line is pointing down. We had a lot of selling going on here. I think a lot of people are just taking profits here. I don't think it's necessarily a weakness in ExxonMobil. I just think it's a weakness in, the rest of the market. And if you have profits, people are selling them, taking them. This is the funds. That's what I think is going on. Let's also look at the XLE. That's the Spider Select. Mainly the XLE holds. Oops, that's Alexander's. The XLE holds Chevron and Exxon stock. That's pretty much what it does. Similar pattern as you can see here. There was an alert on. There was a lot of put buying on the Spider Select. So this one may go even further. We have a indication of the relative strength moving down. What I'm going to do tonight on my small positions in BP and in Shell is I'm probably going to move the stop losses up to about 1-2% below where they are currently, because I do think that we're going to get a downward trend here. This is looking like it looks like we're going to open up on Monday. We're going to open up lower on the oils. That would be my guess. We are going to move lower on the oils. Charles also is looking at short potentially on Verizon VZ. I'm not sure that would be a good one to short just because there's just better patterns here. It definitely is trading below the 200-day moving average, but it has a fairly sizable relative strength, 75. It has rallied up. It is coming down. I just don't think this is a good place to potentially short it just because it is. I just don't think this is a good place to short it. I think that we need, because it's in a downward trend, but there is consolidation basically right at this level right here. So I think that, if it's shorted, it's only going to probably come down here to, it's only going to come down basically to about 45 here. And currently we're at 49. So there's really not a whole lot of drop left on this one. I guess I don't know if that's a good term or not, but I don't think there's a whole lot of left to drop here. I think it's going to get support. Verizon is at about 45. So I don't know if that would make a heck of a lot of sense here. So I would avoid on this one. I would probably avoid shorting. So I would not short VZ at this level. I really wouldn't short it at this level just because I think that it just, it's just there's not enough drop left. They're going to get some support probably at 45. I mean, who knows? You never can tell, but not a good thing. So I probably would not be shorting Verizon here, but we are in the market to short. So I'm going to try to come out with our setup as shorts. I was looking at an interesting stock today. I think it's interesting anyways. And that is, AVGO, which is Broadcom. I do think this is a short, but I'm not shorting it yet. Its symbol is AVGO. This is in the chip space. This is one that I do think is potentially, this one I think is potentially a short. Symbol on this AVGO Broadcom. What's happened is this is setting up, I think, very nicely for that. We rallied today. we have the 50-day average moving below the 200-day average. So this is showing weakness. This is the beginning of the death cross. We've had a fall off. It's not being able to hold the 21-day line. We had a increase up here. We had a rally to 500. It's starting to lose that, and I believe that come Monday, we're likely to see it move lower. We're likely to see it either shelf out here, probably try to hold on to 500, and then I probably is going to go lower. That's based on this chart. We do have, I do think, a potential for a short here. You've got the, if you're looking for a classic shorting pattern, what we have here is we have a head at being its high at 466. This is right in the November. This is on this December time frame. Then we have the left shoulder, which typically is, which is typically higher than the right shoulder. The right shoulder here is higher in this case, but we sort of had multiple right shoulders here. This is the head and shoulders pattern. This is shorting pattern. And then we came down to the 200-day moving average. We got a little support there, but we couldn't hold on to it. It fell. It's now going to try to rally to the. It's going to try to rally to the 21-day line. My guess on this is that the ideal place to short Broadcom is going to be at the 21-day line. Now, currently, that's at 543. We're at 498. So we need a little bit of a rally here. If Broadcom rallies up to the 21-day line or even to the 10-day line, that is where I want to go, and I want to short it right at about these level, because I do think that once it does that, if it can't hold on to that, that's where you're going to see the next drop. So right now, this is on my short list, Broadcom, but I'm not going to short it until we see it rally to the 21-day line. That's really kind of where I want to see it go. So AVGO is on my short list. And this is kind of like the polar opposite. This is kind of the inverse of the watch list. It's the short list. These are the ones that I'm getting ready to possibly short based on where they're at. And I'm going to put some alerts on this one if it can come up to the 21-day, the 10-day line. So the 10-day line currently is at 535. So what I'm going to do here is I'm going to alert it, set the alert at 535. And this is going to be short level reached. So what I'm going to do here on this one, AVGO, this is one that I've been looking at for a while. I want to see it basically rally up to about the 10-day line. That's where I'm probably going to consider shorting it. We'll see if that works out, but that's kind of my thinking at this time. All right. So, Derek, thank you very much. Why is trouble with why is T-Mobile at 120 every time I look? Well, part of the things with T-Mobile, that's TMO. I think that's the symbol on T-Mobile, if I'm not mistaken. No, that's Thermo Fisher. I'm sorry. T-Mobile. I can't remember this one. I can't remember what that is. I'll probably try to get back to it when I have the symbol. Sorry about that. Actually, can you please check this? XELA. I don't know what that symbol is. XELA. And let's take a look at it. XELA. Click here. All right. This is XELA. Hopefully we'll get it up there. There we go. Extra technology. This is a penny stock, 14 cents. I don't think you really want to be in this neck of the woods. I mean, I know that sometimes you can make money in penny stocks, but this just provider of transaction processing solutions in the U.S. and globally. This is fintech. It's in computer software, 188 out of 197. Just not a good look here. Yeah, I'd avoid this one. This just is not a. Yeah, I would avoid this penny stock. This is just gonna. I don't think this is gonna work probably very well. So I would avoid. I know that. So I would basically avoid this this penny. Let's see if I can get it. I would just on this one avoid. And if we can, I would avoid this one just because I think it's it's a penny stock. It's just I don't think it's going anywhere, and probably in this market you just want to be very careful with stocks like this because believe me, they can go to zero very easily. Okay, let's see. Thank you for following me. All right, Powell basically said today that the Fed is going to make a coin for the government. Maybe. I mean, obviously, they're going to try to get rid of. I'm very. I'm a little dubious on that right now. I still think that the greenback is going to be around for a while. Okay, we'll hit 8K. Yeah, okay. This is about okay, so 19K makes sense. Okay, this is on Coinbase, by the way. This is on Bitcoin. I think 19K does, but I think it's going lower than that. I definitely think that we could see it lower than 11,000, and that would mean that it would be going even lower. It might hit 10,000. Yeah, I think you're right. I think you're actually more right on that one. Oh, TMUS. We were looking at the symbol for T-Mobile, and for some reason I couldn't remember it. It's TMUS. You're right. T-Mobile US is the symbol. And why does it keep staying at 120? That was the question. Why 120? Well, it's just telephone stocks in general are not very good. I mean, T, which is been around forever and a day, has not done well. The best of the breed is VZ, and then T-Mobile US. For grins, let's see kind of what the comparison is for the start of the year. So let's do a little comparison chart here on my system. Let's see if we can do that. TMUS, and then okay, then I'm gonna add. Let's see. No. So TMUS. Then I'm going to add VZ. That's Verizon. And then I'm going to add. Let's see. T. That's AT&T. So let's kind of look. I think they're all kind of equally bad. Here's the chart that let me put up the chart here that I've got on this. Let's see if I can. There we go. So let's go to the chart for the three. There we go. Okay, so this is the comparison between the four phone companies. Three phone companies: AT&T, Verizon, and T-Mobile. You can see they're all kind of the same. They're all kind of converging here, but in general, there's been a downward trend in this industry. Just not a good place to be. I mean, right now, there's just not a lot of places to hide in this market. These have all been pretty lackluster. Pretty lackluster in general. So not the kind of, just not a good place to be. Okay, TMUS, thank you for that, Derek. So appreciate it. All right, let's take a look at Alibaba. And everybody likes Baba a lot. It sort of has been picking up in the last few days. I haven't been in the China stocks really in over a year. Just not a place that I've been as interested in. But it's let's take a look at BABA here. Let's get that up. All right, here's Alibaba, and again, this tremendous downward trend here. We just have this tremendous downward trend. Alibaba currently has a relative strength of 38. It is sort of starting to see some life at about 100. That seems to be about a floor for it. But would I buy this thing? Not in your life. I don't think I'd buy it right now. Look at this chart. We were going great again up until about September 2020, and then this has just been a fail since then. It's just not the kind of stock that you want to own right now. It's basically gone down about 2/3 of its value has been erased. So would I buy BABA? No. Look at these fundamentals, and even though their sales are going up, their profits are going down. So the overall, I just think you want to be super careful. If you're down more than 7% in Alibaba, I would sell it. I know that I've been giving a lot of here, you should sell this, you should sell that, but we're in a downward trend, and in a downward trend, really the only way, it's much more difficult to make money in a downward trend, obviously. The real ways to do it, of course, are to short and also to be in cash and not lose. So that's kind of that's kind of the deal on it. So if you're down, if you're down more than 7%, consider selling right now, waiting for a better time to re-enter. But BABA, I don't think is going to be a very, very good stock for you right now. It's just not working as well. All right. So what do you think of Shopify? Is it a buy? No, and I'll show you why. By the way, if you are looking on TikTok and you want to see the charts that I'm showing, you can go to the you can go to my my profile, click on the link, and I have a direct link to the YouTube feed where we're actually showing the charts. So let's look at Shop. And this one was such a good stock, but of course, the market has changed markedly, and it's just not the same market that it was just really since November. So since November, we've had a lot of damage. This great stock, but it's just in a downward trend, and I don't think that's going to change much with this. It's still overpriced at $317. Unfortunately, it's still overpriced. It has a PE ratio of 66. People, right now, fundamentals matter. Whereas they didn't matter as much in the past when we had lower interest rates. With higher interest rates, fundamentals start to matter a whole lot here. Shopify has a 68 PE ratio. It did have increase. It has a 92% increase in sales, but their profits are down. So basically, what's happening here with Shopify, this is not a good time to buy Shop. It's just not a good time to buy Shop. I know that there's a, you think, wow, it's on sale, but it's not. So not a good time to buy Shop. So I don't think you really can buy it here. It's just in a downward trend, and when something's in a downward trend like this, it's not a good situation. We are in a correction in the market. I think the market has to come down probably at least another 10 to 15% on the S&P in order to be viable. So right now, I just don't think you got to be in cash or short. That's really the place to be right now. Even oil is having some difficulty. Even oil is having a lot of difficulty. I hear downward trend a lot. Absolutely, you do, and there's a reason for it. We are in a downward trend, so remember the trend is your friend. So you don't want to buy something in a downward trend. Most of the shares are in a downward trend currently, so you don't want to be buying. You don't want to be long in a downward trend. You want to be short in a downward trend. How to short? Well, if you're interested in how to short a stock, You need to sign up for the action trailers. I'm going to probably try to put out something to my members. By the way, this is free, so it's easy to get on. It's easy to get on. You need to just go to www Dallas Trading Floor and sign up, first and last name and an email address, and that'll get you on the list. And I can show you how I short using options, and this is, I think, the safest way to short a stock. So that is a very, very good question. The host is delusional. He thinks this is a correction. No, this is not a correction. This is that is the technical term. A market in correction is when the stock when the market has dropped more than 10%. That's a technical term. So technical term. All right. What do you think the VIX needs to be? Okay. I thought the Bitcoin. I bought Bitcoin at 55K, and now I'm too scared to hold. So you should sell it immediately. Why? Because it's going to go lower. I'm not trying to, I'm not trying to be a negative Nelly here, but here's the thing: if you sell it today, you hold on to the cash, and then it bottoms, you can rebuy it. You can always rebuy it. It's not an end all be all thing. But right now, I don't see a lot. I mean, we may get a dead cat bounce on it, but right now it's trading at about 20,000, which means that basically it's it could go. Believe me, it could be at 11,000 very, very soon. So here's the thing, and this is always a rule, and I put this out there many, many times. If you're down more than 7% on anything, sell it. Now I know that's hard. That's a very, very hard rule because, believe me, it's been hard for me to do that. But if you're down more than 7%, sell. Wait for a better entry and then come back in. Don't ride these horses down because they can go all the way down. They can go down very, very, very much. Very, very much. I think Dogecoin will be in dollars soon. Probably. I think a lot of crypto is going to be, what's going to happen? I think crypto is going to crash. But when we have the crash, there will be an opportunity after it's crashed, after the wreckage to buy it back. But you can't do that if you ride it down. If you're riding it down, you're just going to lose capital. Remember, the most important thing is to protect your capital. So if you're down more than 7%, you want to sell and wait for a better time to re-enter. Because remember, just because you have sold doesn't mean you can't rebuy at a later time. So that's just the main thing. All right, Charles is talking about short retailers. Okay, very, very good. I was looking at some retailers to short. Let's look at KSS. Kohl's. I was shorting earlier. I was shorting retailers, and I made the mistake of shorting Ollie's, which was a mistake, by the way, because I was shorting after the report from last month. After the report from Target, I started really targeting the retailers. I think though that you're probably better off with some of the mid to higher price retailers for shorting, because I do think there's going to be a shift. The thing about Ollie's Bargain Warehouse, it's OLLI, is that it is a discount retailer that buys their stuff from stores that are getting rid of their inventory. So that's where a lot of people are going to go. People aren't going to totally stop shopping. This is one I think might be a good potential bet for a short. And this is Kohl's, all right? Now, let me show you why I think this. There is a death cross right here. That means that the 50-day line moves below the 200-day line. That's a sign of weakness. We also have a rally to the 21-day line. That's the green line here. And we found that it could not hold it. We also have a floor, which is right at 40 here. That's the floor. So what's going to happen is if it falls below 40, and that's at 40.05, it's probably going to come down to basically at least this level. And this is 34 right here. So, and it probably will come down even further. But my guess is this is going to fail. This is going to fail, and it's going to come down. My guess is it's going to come down to about 34 or 35. That would be my guess. So here's how I would short this one. I would short this one using a bear put spread, a 40/35 bear put spread. I would be buying the 40 the 40 July the 40 July the 40 July 22nd puts, and then I'd be selling the simultaneously selling the 35 July 22nd. That would probably be my short, but that's the one I think that you're right. You're right to look at retailers. I think Kohl's is the weakest though, and that's probably the one that I would short. Anyways, all right, let's look at McDonald's because that's interesting. I heard that McDonald's is getting rid of all their healthy items. Not that they had a lot to begin with, but they just are not as profitable as some of their healthier items, and they're just not making the profits, believe it or not. What do I think about McDonald's? I would stay away from it. I wouldn't short it though, because I see it basically coming down to this consolidation at 217. So I think I wouldn't short it. I wouldn't do anything with it. I just wouldn't buy it. I wouldn't buy it, basically. So that's kind of my take on it. Is Costco shortable? Jim, have a good week. Thank you so much, Samuel. So appreciate it. Actually, I'm short Costco right now, and I'll show you that. And I've been kind of pushing it forward, and seeing if it works. I am short Costco. Let's see, this is at the bottom. I'm still underwater on this trade, but I've just been pushing it out. I do think it is shortable. COST. I do think it's shortable. Unfortunately, I think that Kohl's probably would have been a better choice, but I do think that we're coming to a point very, very soon when Costco can be shorted. Would I short it here? Well, it's getting to the point where we need a few more days, and I do think it will start to move lower. But I think I want to see another rally up to closer to that 21-day line. Currently, we are on the technicals. We are pretty close to the 21-day line. Yeah, we're so 466 is where the 21-day line is. So I kind of want to see this rally, but this potentially is shortable. Also, one of the things that you have with Costco, and this shows weakness, and that is the 40-day line. The 50-day line is just crossed below the 200-day line, and this is starting to set up as a short. So I do agree with you, Samuel, and thank you so very much for that comment. So I do think that Costco is shortable. This market is awesome. I'm ready. Actually, you're right. There's going to be some house prices that drop. You're absolutely right to be thinking that way. So, congrats. By the way, the last time we had the big housing, I came to Dallas basically in about 2006, and I came from California, and I literally, when I got here, I had $500 in my pocket. I'm not kidding you. And I was able to buy houses, no money down, after 2008. I bought my first house in 2008, and then I subsequently was able to buy houses. And it was in the week. It was when they had the sell-off in the market, and it was a great time. And I think there's going to be another opportunity like that, probably in about a year. I'm looking at the end of this year, possibly early 2023. I think we're going to have some opportunities to pick up some awesome deals on real estate. So stay locked and loaded. Stay locked and loaded. All right. Yeah, absolutely. No, very, very similar. Very, very, very similar. Look at the market chart. Okay, let's do this. And just before I go, let's take a look. And what I'm going to do is I'm going to look at the home sellers, and I'm going to look at the chart of the chart of the home sellers. So I'm going to look at let's look at KB Home. Let's see if I can do that. Well, okay, let's do let's look at a long-term chart of let's look at the S&P. So let's look at the S&P back for 2008. Let's see if I can pull that up here. Go to the monthly here. Yeah, and this kind of gives us all the way back here to that time frame. So 2008 is right here. You can see that we had this pullback, this huge pullback. This was the housing crisis right here. See how it moved below that 200-day line down to here, and then basically it bottomed right about in 2009, right in the beginning of 2009. But actually, some of the best deals for houses were actually out in about 2011. That's when I found some of the cheapest properties. I was able to buy a house in Garland, Texas for $42,000 on a quarter acre of land, and it wasn't out in the country in 2011. So that's that's kind of what's happening here. We're still at the very beginning. You see, we've come down, but we're still above. We're still basically testing, and you see we just started to move below that 200-day line. This, by the way, is the COVID crash here. You notice how we pull through this line? That's why it's significant that, as you can see with the S&P 500, when we pull below that 200-day line, that means that money is flowing out of the stock market, and it's also flowing out of other asset classes too. Oh, I'm sorry, I didn't put it up there. I'm sorry. Sometimes I get ahead of myself and I don't put it up there, but here it is. This is the chart of the S&P going back to 2008, and you'll see that basically 2008, that's really when it fell off. This was the housing crisis here. Okay, we bottomed basically at the end of 2008, early 2009. We moved up, and then we continued to move up all the way up to there. But we tested several times. We moved up, and then boom, we tested the 200-day line. Then we came up a little bit more, tested the 200 line. We've been bouncing up ever since. We've bounced here, 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 and here. Now with the COVID crash, that's the time we violated the 200-day line. We violated it here. We've just started to violate here. So this has a long way to come down, I believe. I believe the next leg down is going to be to about here, and that's about 3,200 on the S&P. So anyways, I hope everyone is doing very, very well. What are the indicators to see? What are the indicators to see when stocks or crypto are at a bottom? Well, the main indicator is that nobody will be interested in investing in the market, and they'll say that crypto is trash and all that stuff. That's usually the indicator when nobody else is interested. So, but we have a long way to go. We have a long way to go before we get there. So, everybody, if you're not already on the Action Trailer, it's a great thing, and it's free. All you have to do is go to www.dallastradingfloor.com, first and last name and an email address, and we'll get you all set up on that. Also, please, and this really helps me out a lot. If you could if you could like the show, that would be really nice, because it does help me with the ratings and getting out there to a lot of people. So please hit that like button. I so appreciate that. I'm sure everyone tells you that, but it really does help for me to get that. So until Monday. By the way, I'm going to be off. And this is good. We're going to be off on Monday. The markets are closed for Juneteenth, so we won't be on Monday. We'll be back on Tuesday at 5 o'clock. Happy trading.